Welcome to Markets Now. I'm Michelle Rook, joined this morning by Vince Boddicker of Farmers Trading Company. And Vince, we're seeing mostly higher prices except for the wheat market this morning and the grain and livestock futures, corn and soybeans. Let's start there. Do you feel like the markets are done going down, and are we putting weather premium in, do you think?
I think we have at least a short-term bottom in here, Michelle. As we noted, some of my cycles that I watch, corn was ideally due for a short-term low on Monday. How much we're going to get, I think, really depends. Do we get some funds that unload some shorts? Do we get people to back off because of some of the recent stories of tightly wound tassels and some pollination problems in a few major states that we're not going to pressure it, and maybe we're not going to get the 186 to 189 yield. I think 181 is still hard enough to come up with. Not that things don't look good in our area in a lot of areas, but I'm just not sure it's that good.
Well, in the extended forecast, looks like we may turn back hotter and drier when some of the corn belt's going to be pollinating, right?
It sounds like next week it could get really hot in the eastern corn belt and central corn belt. And again, they're going to add some premium in for that. I would think the market should, the way we beat it up. The real key, I think, is 25 to 32 cents. If we go much more than that, then maybe we're turning the corner and have something different going on.
Yeah, I was going to ask you how much of a recovery you thought we could see. You just mentioned that. My question is, do you think we have factored the biggest yield into this market already, corn?
I think we have. Maybe somebody comes up with something different later, but I think you started to raise a question on Sunday night of, the yield models show you this, they show you that by going on crop conditions, but maybe we can have some other factors that prove you can't just go totally on that. You have to have other things you look at.
Yeah, no doubt. The soybean market, we kind of held the November contract, that $10 level, of bounced off of there. What's the upside potential, do you think, here, especially considering now we have a 70% good to excellent rating on the crop, which is like the second highest in 10 years?
Yeah. I think you really have to think 1040 to 1050 is going to be a tough one to get through. If we come back and we see we have problems, if that heat comes in, as they talk about next week in the major corn growing areas and bean growing areas, and it sticks around, then you could get some things. I always really thought at some point in time you'd get to 11 or better in here, and maybe it's going to take us till late July or August to do that.
Right. There have been concerns, I think, here in the marketplace about, the lack of a China deal, maybe some of what's going on with trade and tariff news and whatnot. And so do you think the market has kind of absorbed most of that now?
I think they have, and you look at all the things you've mentioned. I'm sure there's something else out there, but what else can we throw at the market that's negative? And you've done that, and you've held up fairly well with the winter lows and spring lows in here. So I'm not sure we run away, but you hope there's better days to come and better opportunities to make some sales at.
Yeah. One thing that's notable this morning is soybean meal, after making contract lows for several days, is back to the plus side as we're seeing some adjusting of those meal oil spreads. And oil is taken off because of the biofuels push here with policy. How do you see that playing out? Is oil going to be able to assume enough leadership to help push the market back up, you think, at some point?
I think a lot of that is going to depend on, at least if we get our senators and representatives in the ag states to actually talk about it, not just talk about it to farmers, but be in Washington doing press conference, talking about it, trying to educate the people that it's an environmentally safe thing and it's something that's renewable, that we have that can help our whole ag economy. And if anybody that's watches much of anything in the central part of the country, if ag is good, the rest of the economy is good.
Yeah. And we are waiting for more trade deals. Yesterday, we got a framework announced, at least with Indonesia, which is a pretty good purchaser of soybean meal. So, do you think, is that giving the soybean market any support here or not?
You got to think anytime you get a deal like that, it needs to be written in stone and you've got it. But you need something to turn this thing. Psychology's bad enough in that meal, just like it is in the corn. And again, if you could even get people to say, I'm going to quit selling, I think it's a positive.
Yeah, the funds are not very short in the soybean market, and so could they push the short side even farther, or how much farther?
I think the big key is 980 holding if they want to go down. If you take that out, then your real key area in lead month becomes 945 on a weekly chart. Do I think you need to go below that? With less acres this year and tight ending stocks this year, I don't think you need to go a lot lower.
Gotcha. What about the wheat market? Are we getting close to any sort of a bottom? Wheat is not following corn and soybeans this morning. Are we seeing harvest pressure, not from the US, but maybe other areas of the northern hemisphere?
I think it's very possible. You look at a month ago, we were talking about how bad the European crop could be. A day or so ago, I'm reading about how good it is. In those things hurt it, and most of the world is harvesting in that northern hemisphere. But you would think over the next couple of weeks, we should get most of that harvest pressure out of the way. $5 on that Kansas City September, I think, should be some really good support from a weekly standpoint. Not that we're going to run away, but could we get that back up to 560, 580 in Kansas City? Yes. And as we talked before, we did see the Minneapolis bounce off of the $6 mark yesterday, and hopefully that can continue.
Yeah, hopefully that can hold, but we do have some rains in Canada and some areas of Montana more in the forecast. So, how tough will it be to hold that level with that in mind?
Not sure. I realize that Canada's in some of those western areas are ways out on harvest yet, but I still think we can hold that. The big thing is, can we get some demand going? If we could get more trade deals done in here with countries and figured out so we get rid of tariffs and let the trade do what it wants to, I have to believe that we're pretty competitive in the world.
For sure. Okay, cattle market opening lower, back to the plus side as we speak. Do you think we are going to retest those contract high areas today or soon?
It's a possibility. I still, from a feeder cattle side, I still think you're more choppy than anything in here. Are we, we're discount to cash sharply, but we're not in August yet, so August doesn't have to be there. But box beef dropping $20 off the highs. I realize that the hamburger side of things on those, the ground beef side is holding well, but not sure you can top that market and think you're going to keep pushing higher. I think the packer is going to back off unless demand really remains well.
Yeah, we did we did have cash up sharply last week, almost $8 on the weighted average. Do
Yep.
you get a sense that maybe cash will not be able to advance this week like that, or will we be steady?
I'm thinking you might be able to go a bit, but I think you slow the pace down if you continue to go in here. Everybody, just one other side note in there. I get lots of customers say, well, how can the futures be that much discount to where the cash
Right.
is at? We saw cash in Yankton on Tuesday at 254 for conventional cattle. And I said, a couple of things you have to remember is one, it's not August yet. And two, most of the cattle that are killed, they're 70 to 72% choice. In the futures is really based on a 65% choice, so it's really a lesser grade of market than the cash is. So that's one reason. But are we extremely wide on that basis, even with that into factor? I think we are.
Yeah. And right now we've still got the border closed to feeder cattle at least, or at least cattle coming in from Mexico. So that keeps that supply really tight, doesn't it?
It does, and you got to think it keeps getting tighter. And part of it, what we're seeing, I think, there is the amount of money that feeder people have made when they finished these and bought them early. But as long as they didn't have them totally hedged in here, they made some good money. So they're going to put it back in the market, so have to pay income tax, and hopefully they're going to be okay.
Gotcha. So hogs to the plus side this morning. July went off the board, leaving August at a bit of a discount. So are we trading that, or is this higher cash, or what's kind of helping lift the market today?
I think the discount is part of it, but the other side is when we've looked at recent reports and recent kills, we're still fairly tight on numbers, and I don't see that changing anytime soon in here. So that $100 to $102 mark in that August, I think, should be some pretty good support.
You're referring to some of the disease issues that we're hearing about, right? In terms of the
Right.
tight supplies and isoween prices are
Yeah,
have shot up, so that's kind of an indication of that?
I think so. Had one contact last week talking about six to 700,000 sows in recent months that came up open. Uh, Over time, that's going to make a difference. Over the last 5 years, we've really increased that pig ratio in the sows. But you start getting that many open, you're going to definitely hard to make that up just on more pigs per litter.
Absolutely. It'll be interesting to see where that marketing hole comes then. All right. Thanks, Vince. As always, Vince Boddicker, Farmers Trading Company. That is Markets Now.